If you've been searching steps to buying a house, you're in the right place. Whether you're a first-time buyer trying to figure out where to even begin, or you've been through the process before, but California's market has you second-guessing everything, this video is going to walk you through exactly what you need to know step by step in plain English. I'm Paula Aragone with Aragone & Associates, and we've helped hundreds of families across Orange County, from Newport Beach to Yorba Linda and Huntington Beach, navigate buying, selling, upsizing, estate sales, divorce sales, and much more. I assure you, strategy is what we do. I'm going to cover everything from getting your finances in order all the way through your closing day. And I'll flag the spots where California has its own rules or quirks you need to know about. So let's get into it. Before you ever set foot in a house, the very first thing is knowing where you stand financially. That means three things. First, check your credit score. In California, most conventional loans require a minimum score of 620. But to get the best mortgage rates, you really want to be at or above 700. Second, know your debt to income ratio. Lenders want to see what your total monthly debts are, including your future mortgage. And they want to ensure that those don't exceed roughly 43% of your gross monthly income. Third, understand your down payment reality. In California, where home prices are significantly higher than the national average, this matters a lot. Conventional loans typically require 5 to 20% down. FHA loans as little as 3.5%. California first-time home buyer programs like CalHFA can provide down payment assistance. Worth looking into it if you qualify. Now, get a clear picture of your finances before anything else. It saves you time, heartbreak, and most importantly, surprises later. Step 2, get pre-approved, not just pre-qualified. There's an important difference between the two of them. A pre-qualification is a rough estimate based on information you self-report. A pre-approval means a lender has actually reviewed your financial documents, your income, assets, tax returns, and has given you a conditional commitment for a specific loan amount. In California's real estate market, especially in competitive areas, sellers will often not even consider an offer without a pre-approval. So get this done before you start shopping. It also gives you a real number, your actual budget, so you're not falling in love with homes that are outside of your range. Very important. Step 3, and this one really does matter, is finding a real estate agent who knows your target market. In California, you're working with a licensed professional who is legally required to represent your best interest as a buyer. They help you find properties, they analyze value, write competitive offers, navigate all the disclosures, and guide you through the entire escrow process. As of 2024, there has been changes to how buyer's agent commissions are disclosed and negotiated. Your agent should walk you through this clearly before you sign that agreement for representation. Now, the part most people think of first, the actual property search. Your agent will set you up on an MLS search. MLS stands for Multiple Listing Service. So you're seeing real up-to-date inventory of California's market. Now remember, California's market moves really fast, and having alerts set up means you won't miss new listings. As you search, think in 3 categories: your must-haves, your non-negotiables like number of bedrooms, locations, or school district, and your nice to haves, things you'd love but you can live without, and your deal breakers, things that would make you always say no, no matter what. Also, don't overlook the neighborhood. Research commute times, nearby amenities, and in California specifically, fire risk zones and flood maps. These aren't fun topics, but they are important ones. Now you found the home, now it's time to make an offer. Your agent will help you determine a competitive offer price based on comparable sales, what similar homes nearby have actually sold for, not just what they were listed at. In California, the standard purchase agreement is a CAR form. CAR stands for California Association of Realtors, and that's the residential purchase agreement that we use. It's comprehensive and includes contingencies, conditions that must be met for the sale to move forward. Common contingencies include an inspection contingency, your right to inspect the property and investigate things. An appraisal contingency, the home must appraise at or above the purchase price. And a loan contingency, your financing must go through. In competitive situations, your agent may advise on how to structure the offer strategically, but never at the expense of protecting your interests. California requires sellers to provide extensive disclosures, including TDS, Transfer Disclosure Statement, and Natural Hazard Disclosure and Seller Property Questionnaire. Review these disclosures carefully. Once your offer is accepted, obviously you enter what California calls the escrow period. Escrow is a neutral third-party process where all funds, documents, and conditions of the sale are managed until closing. During this period, typically 21 to 30 days, depending on lender times or cash, several things happen at once. A home inspection conducted by a licensed inspector who examines the property condition. This is one you absolutely do not want to skip. An appraisal ordered by your lender if there's financing that confirms the home market value. A title search confirms the seller has clear legal ownership to transfer, and your lender finalizes your loan approval. If the inspection reveals issues, you can negotiate repairs, a price reduction, or credits with the seller. This is where having an experienced agent makes a real difference. In California, closing typically takes place at the title or escrow company. You'll sign a significant amount of paperwork if there's financing, most of it your loan docs, and pay your closing cost. Closing costs in California generally run between 2% and up of the purchase price and typically include lender fees, title insurance, escrow fees, prepaid costs like property taxes and homeowners insurance, and some can add quickly. Once everything is signed and funds are transferred, the deed records with the county recorder's office, and at that point, the home is legally yours. California is a community property state, which can have implications for how title is held. Your escrow officer and agent can walk you through your options. So let's do a quick recap. The steps to buying a house in California are: get your finances in order, get pre-approved for a mortgage, find a knowledgeable real estate agent, search for the right home, make a competitive offer, open escrow, complete your inspections, close escrow, get your keys, and celebrate. Buying a home is one of the biggest financial decisions you'll make, and California's real estate market has its own unique dynamics. But with the right preparation and the right team, it's absolutely achievable and enjoyable. If you have questions or you're ready to take that first step, drop a comment below or reach out to us directly. Would love to help you. I'm Paula Aragone with Aragone & Associates, and our goal is always the same: to maximize value, minimize stress. We serve Orange County and surrounding areas and would love to guide you through your next move. If this video was helpful, subscribe for more real estate guidance built specifically for California buyers and sellers. We'll see you in the next one.